Hey, what's up, stock compounders? Brad here. So today I want to look at Barrick Gold. Okay, Barrick Gold Stock. We all found out that Berkshire Hathaway added Barrick Gold to the portfolio in Q2 of 2020. So today I wanted to do a little discounted cash flow valuation of Barrick Gold to try to understand, why Berkshire added this position to the portfolio. And of course, we don't know which manager bought Barrick Gold, whether it was Buffett, whether it was Charlie, whether it was Ted or Todd. We don't know who did it. But let's first just take a look at what is this company? What is Barrick Gold? Based in Toronto, Barrick Gold is one of the world's largest gold producers, operating mines in North America, South America, Australia, and Africa. In 2019, the firm produced nearly 5.5 million attributable ounces of gold and more than 430 million pounds of copper. And they acquired Rand Gold at the end of 2018. As of the end of last year, Barrick had 71 million ounces of gold and 13.5 billion pounds of copper reserves. Okay, so I just wanted to take those two figures and figure out, what are those in dollar amounts? If we take the current gold price of $1,944, multiply that by 71 million ounces, we get $138 billion. Now, obviously, that's not gold sitting in a vault for Barrick, but they have the opportunity to mine that amount of gold. Of course, it's going to cost money to do that, but that's what the reserves are: $138 billion of gold based on today's gold price. And for copper, we have $39 billion if we take today's price of $2.86 per pound of copper. So that's kind of some background on the company. So let's do a discounted cash flow valuation. The growth rates that I'm using for Barrick Gold, this 10.7% for growth rates in years 1 through 5 is based on the last 3 years of revenue growth for Barrick Gold. If you look at Yahoo Finance, the analyst estimates for growth over the next 5 years is 13.7%. But I wanted to use a little bit more conservative of a figure there. So I used 10.7%. And then this year 6 through 10 growth rate is really just 10.7% tapered down to 3% by year 10. So it's kind of the average of 10.7 and 3%, which is 6.9%. I'm using a discount rate of 10%. And this is really because I can get 10% from the stock market on average in the long term just by investing in an index fund. So, if I need to get at least 10% picking individual stocks. So that's why I'm using a 10% discount rate in order to discount those future cash flows back to present value. Terminal value. So this is what I'm going to multiply the year 10 free cash flow by in order to get kind of a sale price for the business after year 10. So Mohnish Pabrai's rule of thumb for this is to use a multiple of 15 for great businesses, and a multiple of 10 for, kind of average businesses. And I'm assuming Barrick Gold falls more under the category of an average business. So let's get some numbers. So from Morningstar, I pulled this trailing 12-month free cash flow of $1.89 billion. So I entered that there. We come down here, we get the cash and cash equivalents for the current quarter was $3.7 billion. And then the debt was $5.2 billion. And that allows us to calculate the current value of equity based on this discounted cash flow model. So if you aren't familiar with the discounted cash flow valuation, essentially we're calculating free cash flow for the next 10 years at a growth rate of 10.7% for the first 5, and then 6.9% for the second 5 years, the years 6 through 10. This 40 is just, like I said, the year 10 free cash flow times the terminal value multiple, which is 10. So we get 40 here. Now we're going to discount those free cash flows back to today's value at 10%. So that's what these numbers are. And then finally, so we add all these up and we get a present value of 15 billion. Okay. Oh, sorry, that's just for the terminal value. We add that to all of these present values and we get 32 billion, okay, for the present value of future cash flows. We're going to add the cash, subtract the debt in order to get the value of equity. And then we need to know the number of shares outstanding so we can come up with a value per share of stock. So currently there are 1.778 billion shares outstanding for Barrick Gold. And I got that from the latest quarterly report, which you can get by going to Barrick Gold Investors website or the SEC.gov website. So we get a value per share of $17.23. Now, Berkshire bought this in Q2 of 2020. The low price in Q2 was $18.87. So pretty close to the value I came up with, about 10% higher. The low was about 10% higher than the value that I came up with here. You can see the current price is all the way up to $29.18. Now at the close Friday, it was like $26.99. But because people can see that Berkshire bought it, the price has gone up a little bit since the close on Friday. So currently, it looks like it's 69% overpriced. Okay, 69% expensive in terms of what the value is. Now Berkshire, currently it's like a $564 million position in Barrick Gold. That's a very small position for Berkshire Hathaway. It's like 0.25% of the public stock portfolio, the equity portfolio. So, nothing to get too excited about here, but it is a bit of a divergence from the kinds of companies that Berkshire tends to invest in. I don't think they invest in a lot of mining companies, but where my mind went with this is, okay, they want to invest in gold, but they want to do it in a way that it's a productive asset, right? It's a business that generates cash, rather than investing in the commodity gold, which is a non-productive asset. It doesn't generate anything. It just kind of sits there. So I thought that was a clever approach to investing in gold. But it'd be great to see someone like Sven Carlin value Barrick Gold. Obviously, there's a lot that goes into a valuation. And I know he's valued mining stocks in the past, so that's kind of within his circle of competence. So, I left him a comment today, kind of nudging him to do a valuation on Barrick Gold. But from my quick analysis here, it appears that Berkshire may have picked it up at close to fair value based on this approach. Now, I'm quite sure that the managers at Berkshire Hathaway come up with a value that's a little bit different than this method. This is very simple, very kind of basic, mile-high approach to valuing a company. But, it's interesting. To me, it says something about, maybe Berkshire wants to hedge against inflation. Maybe they're concerned about the dollar crashing or at least dropping because of how much money is being pumped into the U.S. economy, in the face of this pandemic. So perhaps they're seeing tailwinds in gold, which is why they've taken this position. But yeah, I just wanted to give this kind of quick valuation of Barrick Gold, and to get your guys' thoughts on Barrick. It's an unusual play from Berkshire, and curious to see where it goes. Curious to see how high the price gets pushed up just in the next couple of days, because everyone knows that Berkshire has bought into this now. So there's kind of that Buffett, Buffett gravity that may really push up. It's certainly not a small company, of something like a $40-some billion market cap for this company. But anyway, guys, let me know in the comments what you think of Barrick Gold, and if it's inspired you to buy any of either Barrick Gold or just gold, the commodity, because Berkshire is obviously dipping into that space. So anyway, thanks for being here, guys. I will see you in the next video. Take care.